Welcome back, everybody. We got some pretty interesting stuff to deep dive on today. You guys sent in some excerpts from a case study all about high cash value life insurance.
Yeah, this is going to be a good one. It really highlights how this kind of life insurance can be a real powerful tool, not just for, the death benefit, but for building wealth too, and even leaving a legacy.
I love that. And what's really cool is that this case study focuses on like consistent contributions,
Yeah.
and how they can really grow over time. Plus, it touches on some of those key advantages like tax-free growth. Oh, and the fact that you can borrow from yourself, which I got to admit I'm super curious about.
That's a big one for sure. A lot of people don't even realize you can do that. And it really opens up some possibilities that, you might not get with your typical investments.
For sure. So let's meet the star of our case study. This is Jake Thompson, and he's our hypothetical 40-year-old. He's decided to contribute to a high cash value life insurance policy consistently, like $20,000 every year. But now, hold on a sec, because we got to make sure everyone's on the same page here. These numbers, they're just an example, okay?
Exactly. Think of it like a framework. You can
Yeah.
apply these same concepts to different amounts, different situations. It's all about the principles.
Got it. So Jake kicks things off in year one, puts in his $20,000. But here's where things get a little interesting. His cash value isn't immediately $20,000. It's a bit less, like $18,365. I don't know about you, but at first glance, that feels kind of, counterintuitive.
It's a common reaction. People see that and they're like, wait, where'd my money go? But remember, this isn't like just stashing cash into your mattress. There's a big death benefit tied to this, almost $1 million right from the start. The insurance company, they're taking on a risk here, so a little bit of that initial contribution goes towards covering that risk.
Okay, that makes sense. So it's sort of like a small price to pay for the security and the potential growth the policy's got. But does that initial difference, does it really affect how the policy grows over time?
Well, there's a slight difference at the beginning, sure, but in the long run, it's not a big deal. The real magic happens with those consistent contributions and how they compound over time.
Okay, so fast forward now, year 29. Jake's been diligently putting in his $20,000 every year, and boom, his cash value has skyrocketed to over $1.2 million. And the case study mentions a steady 5% internal rate of return. For those of us who aren't, finance wizards, can you break down what that actually means?
Sure. Basically, it's like this. The internal rate of return, the IRR, it shows how much the policy's cash value is growing each year, like an average. It takes into account all the money Jake put in and the time it's been growing. It's a way to see if the investment is really paying off.
So it's not just about the total amount. It's about how fast that money's multiplying. And here's the real kicker. In year 29, Jake's death benefit has also gone way up to over $2 million. Talk about leaving a legacy.
Exactly. This is where it gets powerful. You're kind of using the insurance company's risk to your advantage, to amp up your wealth and make sure your loved ones are taken care of.
Wow. That's a pretty incredible outcome. And while a 5% return might not sound like hitting the jackpot, you got to factor in the tax advantages, right?
Absolutely. That's one of the big perks of high cash value life insurance. The money inside the policy, it grows without getting taxed every year.
So unlike your typical investment account where the tax man takes a bite every year, here your money's just cruising along, growing tax-free.
You got it. And over time, that can make a huge difference in how much money you end up with.
Okay, I'm starting to see how these policies can really turbocharge your wealth building. You mentioned this banking concept before. Could you expand on that a little?
Sure. So it comes from this guy, Nelson Nash. He had this whole idea about becoming your own banker. It's a different way of thinking about managing your money.
So instead of going to a bank for loans, you create your own little banking system using your life insurance policy. Do I add a vault and a top hat with that too?
Haha. Maybe not the top hat. But the main idea is that you treat your money the same way, whether you're using it or letting someone else use it. You're basically tapping into the cash value you've built up in the policy.
Sounds pretty empowering.
Yeah.
But also, it takes a lot of discipline.
No doubt about it. You got to be responsible.
Yeah.
One of the main things is understanding how the policy works, making smart choices, and making sure you replace any money you borrow.
Gotcha. So it's not just about taking the money out. It's about managing it the right way so you don't mess up the policy and you reach your goals.
You nailed it. And that's where having a pro on your side is super helpful. They can help you understand all the ins and outs, make those borrowing decisions, and make sure you're getting the most out of the policy.
It's starting to feel like there's a whole world of possibilities within these policies that we don't even think about.
You're right on the money. High cash value life insurance is like a toolbox full of different options. It can be customized to fit all sorts of goals and situations.
This is fascinating. So we've seen how it can work for someone like Jake, who's contributing steadily over time. But are there other ways to fund a high cash value life insurance policy? Like different approaches.
Absolutely. There are a couple of other strategies we can explore. Let's dive into those next.
So you were saying there are other ways to fund these high cash value policies besides just those steady contributions. What are some of those other options?
Well, one way is to use a big chunk of money, a lump sum, to fund the policy all at once up front. This can be a good move for people who've maybe inherited some money or sold a business, something like that.
So instead of spreading out those contributions over years, they're basically jump-starting the policy with one big investment. That makes sense? But wouldn't that take like a ton of money up front?
Oh, absolutely. It's not for everyone. You got to have the cash on hand. But for those who do, it can be a really attractive way to get that cash value growing faster right from the get-go.
I bet it also means you could access those benefits sooner, like being able to borrow against the policy.
Exactly. By putting in a big chunk of money at the beginning, you're giving that cash value a head start. And that can speed up the timeline for tapping into those benefits.
It's like choosing between a slow and steady climb or like taking a rocket ship up.
Mhm.
So what's that other funding strategy you mentioned?
The other one is called premium financing. It's where you use borrowed money to pay those life insurance premiums.
Wait, borrowing money to pay for life insurance? Doesn't that seem a little, I don't know, backwards?
It might seem that way at first, but there can be some real strategic pluses, especially if you can get a loan with a low interest rate.
Okay, color me intrigued. How does this whole premium financing thing actually work?
It's kind of like this. You take out a loan, usually from a separate lender, not the insurance company, and use that money to pay those premiums on your life insurance policy. And get this, the cash value inside the policy, that becomes the collateral for the loan.
So you're basically using the policy itself, its potential growth, to secure the financing. It's like a self-funding loop. But wouldn't you still have to pay back that loan?
Yeah.
Plus interest and all that?
Yep, you're still on the hook for the loan, for sure. But here's the key, the interest rates. If you can snag a loan with an interest rate that's lower than how fast the cash value in the policy is growing, you could actually come out ahead.
So the cash value is increasing faster than the interest is piling up on the loan. Clever. But doesn't this strategy kind of hinge on those interest rates staying low? What if they shoot up?
You're right, that's something to be aware of. Premium financing, it does come with a bit of risk. Those market conditions, those interest rates, they can be unpredictable. That's why it's super important to team up with a pro, someone who really knows their stuff. They can help you figure out if it makes sense for you, run some different scenarios, and guide you through all the complexities. They can also introduce you to this concept called participating loans, where some of the interest you pay actually gets returned to you. So that's a nice little bonus that can impact your overall return.
Sounds like premium financing is more of like an advanced move. Best for folks who are okay with a little risk and who have a good grasp on how the markets work.
Yeah, I'd agree with that. It's not something to just jump into without thinking, but for the right person, it can be a really powerful way to amp up their wealth building.
So we've got steady contributions, the lump sum option, and now this premium financing. 3 totally different ways to fund a high cash value policy. It seems like the best choice depends on your own situation, what you're aiming for, and how much risk you're comfortable with.
Exactly. There's no magic formula here, no one size fits all. It's all about finding the approach that fits you best. Like a tailored suit for your finances.
And that's where having a knowledgeable advisor is key, right?
Yeah.
Somebody can walk you through all the choices, the good and the bad,
Yeah.
and help you make a smart decision.
Couldn't have said it better myself. Getting that expert advice is essential, especially with something as multifaceted as high cash value life insurance.
You mentioned earlier that there's more to this whole thing than just these funding strategies. What other aspects of high cash value life insurance should we be thinking about?
Well, we've been focusing on individual investors, but these policies, they can be really strategic for business owners too.
Interesting. I never really thought about how life insurance could be used in a business setting. Can you give me an example?
Sure. Let's say you've got a business owner who's trying to, attract and keep those top-notch employees. They could offer a high cash value policy as part of like an executive bonus package.
So instead of just a bigger salary, they're offering a policy that builds cash value. That's a smart way to sweeten the deal for those employees.
It can be a win-win for sure. The employee gets a valuable asset with a death benefit, and there could be tax advantages for both the employee and the company.
Makes sense. It's like investing in their employees for the long term, taking care of them. What are some other ways businesses can use these policies?
Another big one is what's called a buy-sell agreement. These are super important for businesses that have multiple partners.
Why are those so important for partners?
Well, think about it. What happens if one of the partners passes away unexpectedly? A buy-sell agreement, funded by a high cash value policy, it makes sure that transition of ownership goes smoothly.
So the death benefit can be used to buy out the deceased partner's shares, taking care of their family and making sure the business keeps running smoothly.
That's exactly it. It protects everyone involved and prevents potential problems during a tough time.
These policies are like a safety net, aren't they? For unexpected situations, both personal and professional. But what about using them for, like, wealth preservation, protecting your assets?
That's another big advantage. High cash value life insurance can help shield your assets from things like creditors and lawsuits.
Hold on, really? How's that possible?
Well, in a lot of places, the money inside a life insurance policy, the cash value, it's protected from creditors. It's like a level of protection you might not get with other investments.
So it's kind of like a fortress for your wealth, protecting it from potential threats.
You got it. It adds another layer of security to your whole financial plan. Before we move on, I want to circle back to that whole banking concept we talked about earlier.
Okay, I'm all ears.
So let's say you're a business owner and there's this great opportunity to invest in new equipment or expand into a new market. Instead of running to the bank for a loan, you could potentially use the cash value from your life insurance policy.
So you're basically becoming your own bank, using your own funds to grow your business or seize an opportunity. It's like having a stash of ready-to-go capital right there in your pocket.
That's the gist of it. It gives you that financial freedom and flexibility that can be a game changer for business owners.
All right, so we've covered a lot. Different ways to fund these policies, how they can be used in a business setting, and even how they can help protect your wealth. Is there anything else we should consider when we're looking at high cash value life insurance?
One question that comes up a lot is the rate of return. People want to know how these policies compare to other investments, how much money they'll make.
That's totally understandable. Everyone wants to see their money grow.
Right. But here's the thing. It's not quite fair to compare the returns of a high cash value policy to something like, I don't know, the stock market. They're just different animals,
But why is that?
Well, high cash value life insurance, it's not just about squeezing out the highest possible return, not in isolation at least. It's about building this whole financial platform that combines a bunch of benefits. You've got the death benefit, the potential for tax-free growth, you can borrow against your own money, and you might even get creditor protection, all in one package.
So it's more of a holistic approach. It's about managing and growing your wealth, considering all the benefits, not just the numbers on a spreadsheet.
You nailed it. And when you combine all those benefits, that's where this strategy really shines. It's powerful stuff.
Wow, this has been incredibly insightful. We've really pulled back the curtain on high cash value life insurance. But I have a feeling there's even more to it. Are there any super advanced concepts or applications that we haven't even touched on yet?
Oh, we've barely scratched the surface. There's a whole world of advanced concepts and applications out there.
Okay, my curiosity is piqued. Let's take a moment to dive into some of those advanced concepts. All right, so we're back and ready to explore these advanced concepts you mentioned. What are some of the more intricate strategies people use with high cash value life insurance?
Well, one area that gets really interesting is using policy loans for real estate.
Wait, what? Using life insurance to get into real estate? That's a new one. How does that even work?
Okay, so picture this. You access the cash value in your policy through a loan, and then you use that money to buy an investment property.
So instead of going to a bank for a mortgage, you're basically borrowing from yourself using the policy's cash value. That's pretty neat. But what's the advantage for the investor? Why do it that way?
Well, there are a few potential benefits. For one, the interest you pay on that loan, it often goes right back into the policy, so it's actually helping the policy grow. Plus, you can use the rental income from the property to pay down the loan. And on top of that, the property itself could go up in value, so you're building wealth outside of the policy too.
That's a really smart way to use the policy to get into real estate. It fits perfectly with that whole becoming your own banker idea we talked about. Are there other strategies like this?
You bet. Another one involves premium financing, but not just for funding the policy itself. We're talking about using it as a tool for wealth transfer.
You mean like passing on wealth to your heirs, right?
Yeah.
How does premium financing help with that?
Okay, so let's say someone wants to leave a big inheritance for their family, but they don't want to get hit with a huge estate tax bill. They could use premium financing to fund a really big life insurance policy on themselves.
So instead of paying those premiums directly, they use a loan to cover the costs. But wouldn't that just leave their heirs with a big debt to deal with?
That's the cool part. The loan is set up so that it gets paid off with the death benefit from the policy.
Ah, I see. So the heirs receive the death benefit, pay off the loan, and still end up with a nice chunk of change, maybe even more than if the person had paid the premiums out of pocket.
Exactly. It's a bit complicated, but for people with large estates, it can be a really effective way to potentially reduce those estate taxes and pass on more to their loved ones.
Man, these advanced strategies really show you how versatile, high cash value life insurance can be. It's way more than just a simple death benefit. You can use it to build wealth, invest, and even plan for the future.
You're getting it. This area of financial planning, it often gets overlooked or misunderstood, but for those who are willing to dig a little deeper, it's got some really unique possibilities.
Well, you've definitely given me a lot to think about. We've covered so much ground today, from the basics of how these policies work to some seriously advanced stuff. But I think one of the most important takeaways is the importance of getting expert advice.
Couldn't agree more. High cash value life insurance, it's not something you want to try to figure out on your own. You need to find a financial advisor who specializes in this stuff, someone who really knows the ropes.
They can help you create a plan that fits your goals, your risk tolerance, and your financial situation.
Absolutely. They'll make sure the policy is set up correctly, guide you through all the details of loans and withdrawals, and help you navigate those advanced strategies we talked about.
So for our listener who sent in these really interesting documents, if you're thinking about exploring high cash value life insurance, what's the best next step for them?
Reach out to a qualified financial advisor who specializes in high cash value life insurance. They can answer all those questions, offer some personalized guidance, and help figure out if this type of policy is a good fit for their overall financial plan.
Great advice. It's all about education and empowerment. Knowing what you're doing, having the right guidance, that's what makes all the difference.
You said it. It's about having the information you need to make smart choices for a more secure financial future.
This deep dive has been incredible. We've explored the ins and outs of high cash value life insurance, the benefits, and even some really advanced strategies. But remember, the conversation doesn't stop here. Keep learning, keep asking questions, and consider how this powerful tool could play a role in your financial journey.
It's your financial future. Take charge, seek out knowledge, and make choices that help you reach your goals.
And that wraps up our deep dive for today. Until next time, keep learning, keep exploring, and keep striving for financial well-being.